management of Ujjivan, the MD and CEO, Ittira Davis, with us in the studios. Mr. Davis, thanks so much for joining in. The second quarter numbers, they've been relatively better than last year, although the profits are stable on a sequential basis. What would you say were the key profit drivers for you?
Good morning. The business has picked up in the second quarter, and the trends the basis on which we set up our branches and begun to focus on growing the business is now taking shape, as against last year where we were tackling the effect of demonetization. So I think we are on a good track and moving in the right direction.
Okay. What has led to the margin expansion for you, and can margins be sustained at this 11 to 12% kind of range despite rising costs, and if so, by how much?
The margin was due to the fact that we had higher cost funds which we had borrowed earlier when we were a microfinance institution, and part of that was repaid. So we replaced it with deposits which were at slightly lower cost. So that will continue for the rest of this financial year. So we should be able to contain the growth in market interest rates and build that into the overall profitability.
All right. What is leading to improvement in asset quality? What are the key factors?
The asset quality, we have taken care of all the provisions last year based on what we found as the reasons for taking care of the portfolio, cleaning it up. And all of that has been taken care of. So we are back to the traditional, the asset quality levels that the microfinance business has been known to be during a normal business environment. So the net NNPA is now about 0.3%, and that is a very, very comfortable level.
Which states are showing better collections and recoveries according to you?
We had a little problems in a couple of states. We are seeing steady recoveries in Karnataka and Maharashtra and in UP. And in the other states where business was doing well, it continues to do well in West Bengal and Tamil Nadu.
Okay. Your deposit book has jumped 10% quarter on quarter. At what level do you see deposit book by the end of FY19, FY20?
The FY19, we expect our deposit book to reach about 7,000 crores in terms of both retail as well as wholesale deposits. And, that is a good growth on where we are today. We have 300 plus 367 branches are now fully bank branches as against 180 last year. So I think, the growth in the bank branches will help us to mobilize deposits in the field.
Mr. Davis, would like to understand if there were any hiccups in growth for you in the quarter gone by because of the recent liquidity crisis, and if it had any impact on the margins and business per se.
No, the fact that we are a small finance bank and we are regulated by RBI, and we have also got our scheduled bank status, all of this helped us in being able to overcome or manage the situation in the financial markets. In the early stages where the NBFC crisis started, obviously people were trying to understand who is an NBFC and what is the current situation, etc., in terms of how to understand the market. And that has now settled down. And we are seeing that the liquidity is not an issue, and we are able to manage the business going forward.
Right. What gives you the confidence of expecting an AUM growth of 30 to 35% for FY19? Which states and segments will drive that growth according to you?
See, traditionally, the second half of the year has always been better in terms of our business than the first half. So that is the natural way in which our business grows. The festive season is in the third quarter, and in the fourth quarter, as it comes to the end of the financial year, things pick up. So these two quarters generally are better than the first two quarters. So that itself is a natural tendency to grow the business. And the fact that now we have got all our staffing and, all our branches are going to be ready to grow the business, all of those factors help us to grow faster in the second half. And then, going forward into the next year and two, we are well placed to take this whole thing forward. So I think, the fact that we have invested and the fact that we have built a base is something that the market should understand, is that we have put in place the infrastructure that is needed for the growth.
Okay, Mr. Davis, good luck with that, and we'll chat again soon. Good to have you in the studio.